Okay, we want to welcome you. We're going to go ahead and get started. We're going to get started with our first-time homebuyers webinar. My name is Jennifer Young, and I'm with University Credit Union. And joining me today is Heather Bollinger. She's one of our mortgage consultants here at the Credit Union.
Hello and welcome.
And just a few housekeeping items. We're just going to, if you have questions throughout the presentation, we're going to stop periodically throughout the presentation and answer questions. So if you do have questions, make sure and type them in. There's a lot of things that come up that we're already going to cover, so we may not stop immediately, but we'll try and address those questions as quickly as we can. Let's see. There was one other thing that was, the biggest thing, we have tickets. As most of you know, when you signed up, you also were put into a drawing for basketball tickets to the University of Utah versus UCLA. The game is on Saturday, March the 9th. And also along with those tickets, whoever the winner of those tickets gets to do the shoot for loot. James from marketing is with us today, and he's going to help with the webinar, but he's also going to explain a little bit more about the shoot for loot, because quite honestly, it gives me anxiety. The pressure is on shooting basketballs. He'll explain that a little bit at the end of our webinar, and then we're going to go ahead and we'll actually be sending out, at the end of the webinar, we're going to be sending out each of you an email along with details on who won that and some more of the details on that. But you'll also receive a copy of this recorded webinar. The webinar is being recorded so that you'll be able to reference back to it and answer some questions if you don't take notes on it. So we're going to dive right in and just get started. Just so that you know, again, this is to cover first-time homebuyers. What we would like you to come away with is of what you can anticipate as a first-time homebuyer, what it looks like on the loan side of it and what it looks like on the real estate side of it. So when you're ready to pick a property, you go under contract and what that's going to look like. And we're going to cover a lot of those questions that you may have. But for now, we're going to dive right in and talk more about the first-time homebuyers. So at the credit union, we are a full-service lender. We offer conventional, FHA, VA, fixed and adjustable rate mortgages. We also offer short-term mortgages as well as construction and lot loans and jumbo loans. And we'll explain a little bit more about each of those as we go forward, kind of some of the differences, and make sure that you're well informed.
So when you are, going over, are you ready to buy a home? When you're ready to buy a home, things that you can expect. So we'd love to meet with you in person and go over what an application looks like. Meeting is a pre-approval process. We'll go over budget, what works for you, what works for you and your family, what works with your current debt structure, and find a monthly mortgage payment that is comfortable for you. I even will pull up homes and help you go over and put prices to them, find a home, and then once we finish an official application, I'll give you a formal approval that you can then go shopping with your realtor. And then from there, once you find a home, then we go into the process of ordering appraisal and title, and yay, we get to closing.
Okay. There are a lot of variables that affect your mortgage payment, and we want to make sure that you understand those. Obviously, the down payment is going to be a big variable. More down, less lower your payment, less down, higher payment. If you're looking at a home that is maybe a condominium or a homeowner's townhome, you might have HOA. HOA stands for Homeowners Association fees. Those obviously are going to affect how much your overall monthly obligation is. PMI stands for Private Mortgage Insurance. Private mortgage insurance essentially is an insurance that allows you to finance more of the home. As a first-time home buyer, you can actually finance up to 100%. PMI insurance protects our interest in the exposure. It essentially allows you to finance a higher amount. Property taxes and homeowners insurance, those both play a big role on what the overall amount of your monthly payment would say of the better situation you're going to be in. And we're going to give you kind of a picture of what the impact of that is like. So on the next screen, we're going to show you what credit impacts or how credit impacts.
So when we have mortgage products where you can finance up to 100% of the purchase price. But if you do have less than 20% down, you may have mortgage insurance. And these are some ideas or some examples of what it looks like when you're putting 3% down, 5% down on a purchase price of $300,000. The biggest thing that we want you to take away from here is how much credit score affects the mortgage insurance. This is based on a conventional product. We do also have FHA loans where the mortgage insurance is different than this pricing, but then there's also some other fees that are associated with that. So when we meet with you, we'll go over where your current credit is, whether or not it can be improved, what we can do to help you improve it, so to help minimize your costs.
Okay, so we talk about a lot at the credit union. When you meet with us and when you hear us talking, we talk about the benefits of membership. And this is a great example of the benefits of membership. If you were to go somewhere else to another institution and get a quote for PMI insurance, this is what you would be looking at based on a purchase price of $265,000 with a 5% down and a credit score of 740 or better. Another institution is going to quote about $125 a month. With the credit union, because we do have preferred pricing with the PMI companies, they actually give us better pricing, and so $92 with us. Now, just to give you an idea of the difference of the 92 and 125, that actually qualifies you for about 18 to 20,000 more in a purchase price because of that savings. So it gives you stronger buying power, more buying power because of being a member of the credit union and the preferred pricing. So that's another benefit of being a member with the credit unions. We like to just point that out so you know that you're getting a great deal with the credit union. There are additional things that you need to be prepared with, and we want to make sure that you're aware of those.
So one of the big things that I'll do and the other mortgage consultants will do when they sit down with you is we're going to go over what it looks like to buy and what you need to be prepared for. And that's going to mean your down payment, your cash to close, your closing costs, your escrow setup. And then we also want to keep in mind near future or immediate expenses, such as whether or not you're going to need to buy a refrigerator, or if the roof needs to be repaired in the next couple of years. If you're going from, if you're buying a brand new construction, and even sometimes existing homes, you might need to have window coverings, whether it be blinds or curtains. And if you're going from a condo or an apartment to a single family home, you might need a lawnmower. So things that will help you think about and to budget for.
The whole goal of this conversation with you is just to make sure that you understand there are so many different things to contemplate and so many things to think about. And we want to make sure that this is a positive experience, that buying a home turns out to be a positive experience for you. And the best way that we know how to do that is to make sure and communicate and make sure that this is an open conversation, communicate all of the different things to consider, that you're well prepared. Additionally, we offer, if you get out there and like many of the people in the market right now are struggling to find homes, if you decide that there just is not that home out there that you want to buy and you want to build your own home, we do offer construction loans and lot loans. Now, we're not going to go through a lot of the details on these, and we're not going to go into a lot of detail. This really applies to you buying a custom or building a custom home. This is not a scenario that if you went to one of the bigger builders in town, like an Ivory Homes or a Destination Homes or a Edge Homes, this isn't that type of a home. Those big builders provide you with the construction financing. They don't require you to get your individual financing. And so what we're referring to is if you want to build, if you find a piece of property you're in love with and you really want to build your dream home on that, we do have the ability, and we are a full service lender, so we can offer you construction loans. We do limit those to primary and second homes only, and we do have single or two-time closing options on those, and we will go up to 95% of the value or cost, whichever is most limiting in that. And then on the lot loans are really meant to be a temporary loan. It is for improved lots only, and you have to have year-round access. We do have issues here in Utah not being able to access some of them year-round. So, and we will go up to 80 or 70%, sorry, 70% of the value or cost. And it is a 15-year amortization, so that's how your payment is figured, but there is a 2-year call on it. The 2-year just is a time frame for you to finish plans, get your permits in line, and get everything ready to go. So it's not meant for long-term financing. It's just meant to get you through that stage, just so that you know that we offer those. So why now, Heather? Why is now a good time?
Why now is a good time is because it's always a good time to own your own home. And we'll go over that and whether or not that makes sense in your life. And so when people ask me, when is the best time to buy? The best time to buy is when you are ready. And Jennifer's got some additional things on that that I agree with.
Yeah, I think we have worked, both of us have been in the industry 20 plus years, and we've worked with many people that are looking at different reasons for buying. Real estate is a great investment, and it is a long-term investment. And when I say long-term, it's 3 to 5 years. It's a great investment. There's times in the market that you can really, really do well, and there are other times that you may not do as well. But even that being said, they're still overall a good investment. The rates are great, and the programs right now in the industry are fantastic. There are some amazing programs out there that give you lots of different options. If your concern is credit, we can work with you. If your concern is down payment, there are great programs available. If your concern is your length of time on jobs, we get asked that question all the time. Just a scenario, Heather, I've been on my job for 3 weeks. Can I buy a home?
Yes, you may be able to.
There are a lot of misconceptions in the industry, and part of the fun of this is there are a lot of opportunities. There are lots of programs available to help through and address and get you past all of those reasons that may have been stopping you prior. And so we just feel like it's a great opportunity anytime, but now, especially with the market the way that it is and rates and values, everything looks like a really great time to buy real estate. So that's my input. Plus, we have this amazing program for 100% first-time home buyers, and I'm going to have Heather explain a little bit of the details on it.
So our first-time home buyer program is truly, you need to be a first-time home buyer. And as far as the purchase price, we will finance 100% of the purchase price. And in all that we ask of the buyer is that you have at least $1,500 towards closing costs. And and I can help work with you to get that money saved, help you with the budget. And the rest of it can either, if you have it, great, or it could come from a gift from an immediate family member, or I can help with you and your agent. We can work with the sellers to get a seller credit for the rest of the closing costs. The other criteria is that you need to have a credit score of 680 or higher, and that it needs to truly be your home. You need to live in the home. It can't be a rental. We have 15 and 30-year options available.
So it's just a great program. It's a great opportunity for you first-time home buyers to be able to finance. We get kids that are just graduating from college. They come in and they're like, we've been so focused on college and we're in a great position. Either they have student loans or they don't have it. It doesn't matter either way as long as you qualify. But the biggest issue that they've got is they haven't had a chance to save.
The other super great thing about this product is there's no mortgage insurance.
Yeah, there's no PMI insurance.
There's no mortgage insurance. So if it does have a little bit higher rate than the market rate for what you would qualify for to offset that. But if you, I've even looked at this product for somebody who has 5% down. If you can have 5% down, it helps with the pricing, and we could still do it as a first-time home buyer with no mortgage insurance.
We'll definitely sit down when we sit down with you. We'll go over lots of different options and make sure that we give you just more than one. There's never just one option.
No.
How often do you ever meet anybody that they only have one option?
No.
Never.
Well, I'll take one house and I will put 3 or 4 different products to it and show you 3 or 4 different payments, which all have a different cash to close scenario.
And then you, as the member, it's up to you to choose what works best for you, because you know, in the end, you really know the best. We're here to counsel with you and help you, but yours is to choose. So we're going to stop. There's a couple of questions that I wanted to make. There was a question: are there any advantages or disadvantages to a 15-year versus a 30-year on loans? Do you want to address that?
Sure. So the biggest, so on a 30-year loan, one of the biggest advantages is that it's going to have a lower payment. And so it depends on your individual situation, if that is going to be beneficial or not. The obvious of a 15-year is you're cutting off 15 years right off the bat. We could also look at a 20-year. So there's different options there. Typically, the rate on a 15-year is going to be lower. And if you do have mortgage insurance, it's also lower on a 15-year than a 30-year.
And how long does the process of making application or the process take? How long does it take to qualify for a house?
So that is, everybody's situation is different. It is one of those things that literally we can sit down. If you're truly ready, you come to me, you've got your pay stubs and you're ready, you've got your down payment if you need one, you're ready to move forward, I can take an application, send you out with a letter in less than an hour. You can make an offer tonight and we can be closed in 3 to 4 weeks. But everyone's situation is different. So if I need to spend time with you going over what makes sense for a budget, for a payment, what you need to do to get your finances ready to be in that position, I'll take the time to help you do that. Even if it means it's taking us a couple months, maybe a year, maybe you know you're not ready for a year, you're graduating college, depends on your situation, but we can make it happen very quickly.
Okay, so if I called you, so I'm going to add to that question. If I called you and said, Heather, I need to meet with you right now, and I have my W-2s and my pay stubs, and I need to know how long does it take me to get an approval letter?
So I always ask people for up to an hour, but if we need, just because the biggest thing is it's going to depend on how many questions you have, because I want to make sure you're comfortable and you know what you're getting into. I want to go over the budget with you and make sure that you feel good with it. But realistically, we can get it done in about 20 minutes.
Okay. So the whole point of that is to let you know we're here to help you, and we can turn and burn things really quick for you. If you have questions, we can answer the questions, but if you just really need us to get you in, get you pre-approved, and get an approval letter in your hand so that you can see that house, we are here to help you. We're here to help you do that. Most agents and most sellers really don't want to take you and show you properties until you have been pre-approved. And that was one of our next questions is, do we have to be pre-approved before you see a home and before you go through? And the answer is you really should be. Most sellers won't let you come through the home unless you've been pre-approved and they know that you're serious. They just don't want to have to be displaced from the home to let you see it when you're not really serious. Selling a home is just as difficult as buying a home. It's exhausting. There's lots of work on both ends, and so they just want to be respectful. And you want to be respectful of the real estate agents. This is their profession. They don't want to be sending, or taking people out that aren't really interested and serious about it.
Your time is valuable. Their time is valuable, and so being respectful of everyone, and plus it gives you a peace of mind to know that you really can truly qualify for what you're looking for.
That's a really good question. So the next question is, what are the benefits of the 100% first-time home buyers program?
We can help get you in a home now is one of the biggest things. Having no mortgage insurance is definitely a benefit, but the biggest thing is not having to wait for saving the money for a 3 to 5% down payment.
So I'm just curious, we did this and we totally are the worst at polls. So I'm not going to ask a poll, but I'm going to ask the question. how many of you knew or expected that you would have to save 20%? I probably said that wrong.
Yeah.
Did you think that you had to save 20% to buy a home? Or did you know that there was, I'm curious if you guys all type in your answers, did you know that you could get into a home with less than 20% down?
There we go.
It takes me like 10 times to say that question every time. Sorry, you guys. Because we have a lot of people that have this perception that they have to save 20%. Oh, I am so happy. One person so far said they thought they had to have 20%. See, Carol, I am glad that I asked that question, even though I butchered the question.
And we can sit down and show you how it actually saves you money to buy a home now instead of waiting until you have a full 20%.
Yeah. So I have a really quick example of that. So I have a cute nephew, and he will go unnamed because he would punch me in the face if I said his name on here. But he's such a cute kid. And 2 years ago, he came to me and he was like, so I'm just finishing up school and I'm saving and I'm just so excited to be able to buy a home. Well, that was really the end of the conversation. And about a year ago, he came to me and he said, okay, we're still trying to get our 20% saved. And I just couldn't even believe I didn't even, get more into the question. And he had been thinking, and how much has the market gone up in the past 2 years? I'm going to guess that every one of you understand the market has gone up far quicker than you can save that 20%. And so the idea of opportunities out there for you as first-time home buyers that allow you to get in with, 0 down or 3% or 5% is amazing. And your value is going to go up quicker than what you can save that 20%. So really,
your value, you're getting more in value than you are in interest of the money sitting in a bank account.
It is just there's such great opportunities available to you. So we could go on and on and on about that, but we're going to dive in and we're going to talk to you a little bit more about what the real estate side is. So first, before we jump into it, you need to know that we have the opportunity for you as members on our website to use what's called an MLS search. The MLS stands for Multiple Listing Service. And essentially, you have access to every home that is listed for sale on the Multiple Listing Service, the Utah Multiple Listing Service. Now, we did have a question, do we have access outside of the state? And the answer is no, sorry. I wish, but no. But anything inside the state of Utah that is listed with a real estate agent is listed on the Multiple Listing Service, the Utah MLS, and you have access to it. If you go on our website, which I already know, y'all know where to find us because you're here, you can go in and you can find the tab that says find a home. If you click on that, it's going to take you to the Utah MLS search website that we've partnered with, and it will allow you to go through and search homes. Now you're searching in real time. You can also save your searches. You can make a note to get notified for new listings. You will get a phone call from the agent that we are working with in conjunction, but only as a follow-up to see if you have any questions. You will not be hounded. You will not be bugged. It's not like you're going to go in. If you do saves, they will send you suggestions on homes that are similar to those, but there's no obligation. It's really an opportunity for you as our members to go ahead and access the information on the MLS. Now, we have a couple of other questions. Jackie, thank you for the question. What does real time mean? Real time means that as quickly as homes are listed for sale and as quickly as homes are updated as pending or sold, that information is updated on the MLS. As quickly as they enter it, it's updated on our site as well. So
and I will vouch for that because I've literally been looking at a home with a member. We refreshed the screen and it would say under contract. And so it's pretty real time.
Yeah.
Lindsay, wonderful, wonderful question.
And so read the question so everybody knows.
So will it save money to do the first time home buyers with no PMI if the rate is higher? Won't the higher rate cost more over the life of the loan than if you could remove the PMI after several years of payments? What is the difference in cost? First of all, the 100% first-time home buyer product is designed to get you in a home. My experience is that generally I would expect that on this product, and we've had it out almost a year, and I've already refinanced people off of it in less than a year. It's like, but my experience is that generally within 2 to 3 years, people are going to be refinancing, whether it's to maybe go to a shorter term, maybe it's to get cash out, maybe it's to remove or reduce PMI, or just life events happen and you're going to refinance. So I never look at costs over a life of a loan, because that's not the intention of most loans that you get into with a purchase. It's not intended for it to be the life of the time that you're in the home, or 30 years, 15 years. So very, very good question. So the benefit of it right now is to get you in a home. There's kind of a break-even point, and it's different with every borrower, but around 250 or so, where the payment's about the same with the higher rate versus mortgage insurance.
Those are really, Lindsay, those are great questions.
Very good.
The thing that you need to remember is that we're really going to take the time, and we're going to give you examples. We're going to give you several different scenarios. And like Heather alluded to earlier, there are times that you sit down with just one home and she'll run 4 or 5 different scenarios for that home. We're going to do those, and then you're going to be able to choose from that what works best for you. It's not a situation where we're going to say, this is it. You just have one. I mean, I will tell you, in the 30 plus years that I've been in this, and the same as Heather, I don't think we've ever just given anybody one scenario. It just doesn't. We don't make your decisions for you. We want to make sure that you have lots to choose from. So, but thank you very much. Katie has a question. Are there penalties for paying off your home sooner, or must you stay with the payment plan agreement? That is an awesome. I love hearing this question. I am a big advocate of pay it off as quickly as you can. There are no prepayment penalties on any of our loans that we do. I say that, and as soon as I say that, I'm going to tell you on some of our consumer products, those products like a home equity line or our short-term mortgages that we do, some of those have a clause in them that say if you pay it off sooner than 2 years, then you have to reimburse us the expenses, because on those programs we have no fees. And so for home equity line or a short-term mortgage, we may ask you to just keep it open for 2 years. And if you close it before 2 years and pay it off before 2 years, then we'll just ask you to reimburse us the fees that were charged. It's not a prepayment penalty, but it's just letting you know that the fees that are being charged are free as long as you keep it open for 2 years. Hope that makes sense.
But with our typical loans, our first-time home buyer, our 15, 20, 30-year conventional products, FHA, VA, no prepayment penalty. Please pay it off as quick as you can. I'll even help you run amortization schedules if you were to pay an extra $50, an extra $250, as to what that would save you and how much time it cuts off. I do that a lot, especially with people who know that they only want to be in a house for 5 years, and it's and then they want to have a family, or they want a bigger house, or just different things. I'll help show them how to pay that home down as quick as possible, or as much as possible in 5 years, so they have that much more of a down payment for the next house.
You get, as you can tell, we're really chatty, but you'll get lots of different options and lots of different ideas, and that's what we want you to take away today, is that we're here to help you kind of navigate through this. Nicole, you have a question. Thank you so much, by the way. You have a question, Nicole, and your question is, with the first-time home buyers program on a 30-year loan to buy a $260 home, what's the general amount that we should come ready with at closing to pay for all closing fees and other payments? Nicole, the only reason I'm going to ask you if you can reach out to us direct is because that has a lot of variables to it. Like we've talked about, we never just give you one scenario that says this is exactly what it is. We want to make sure that we're giving you a couple of different scenarios, and that would take more time, and that's very specific for this presentation. And so if you wouldn't mind if I can have you reach directly out to Heather, Heather can help you through those. You'll get lots of different questions or lots of different options for you to know exactly what you should anticipate. So that's a really good question. Just reach out to her direct. And if you have a question, you can find her right on our website under the mortgage consultants. You'll see her picture there. Our pictures on it. We all dread the pictures things, but just throwing that out there. Okay.
So another great question, and I actually had the opportunity to compare something like this not too long ago. So the question is a USDA loan a good loan? Yes or no? You know, for the right circumstances, it is a good loan. But if we can do our 100% financing or even our 3% conventional, it is a much better product. The one that I compared on it was like a $200,000 scenario over 5 years. Because of all the things that were financed in a USDA loan, the conventional would have saved the member over $30,000. It was just the way that they structure it and all the costs that are added into it. In the one I was looking at, it had you basically started over the purchase price on the loan. So if it's something that needs to be done and it gets you in a home, then yay. But if we can make one of the other products work, then it's going to be, in my experience, a better situation.
It's again, we've said this and we'll say this a bunch of times, but it really depends on your scenario. We're going to give you lots of different options. We have worked with USDA, but what we have found is we've found that other products actually work more effectively, and it hasn't been as expensive. And we're all about saving money. It's good when you have frugal loan officers working for you, because we like to find ways to save money. So hopefully that's a good thing. So I've gone over the MLS search. Hopefully you'll take advantage of that as members. It's an awesome search opportunity. And we're going to dive in now, and we're going to go through this fairly quickly. There's a lot of information. Remember that we're going to send you a copy of this link, and you're going to be able to watch this over and pause it and kind of make notes if you want. But we're going to go through this fairly quickly because we really know your time is valuable, and I can't talk, sorry. We don't want to keep you too long. Making the offer, essentially this step is when you're really serious about a piece of property and you want to put an offer in. And the process is called, you make an offer, you put earnest money down, but your earnest money is protected. A lot of people think if they're writing a check for earnest money, or if they're giving money for earnest money, that money is gone and it doesn't go towards. It's not. There's a couple of things that you need to know. The earnest money is typically between 0.5% to 1% of the purchase price. That's a standard in our market. It's protected. It's protected by 4 different time frames or deadlines throughout the process. And when I talk about days after, what we're referring to is once you make an offer and that offer is accepted, you're considered under contract. And at that point, the clock starts ticking, and there's different deadlines that need to be met. Normally that earnest money is deposited with your agent into their brokerage account. That money is actually given towards whatever your expense is at closing. So your down payment and closing costs, whatever you pay for earnest money is credited towards that. So it's not just money that disappears. We get that all the time. It's like, wait a minute, I have to give them how much? And is it just gone? It's not gone. Don't panic. It's protected. So, and we're going to go through the 4 deadlines. So the very first thing that's going to happen once you go under a contract is you're going to sit down with your real estate agent and your loan officer, and you're going to review some things. You're going to go through the purchase price. Your agent, before they ever really make an offer, is going to sit down with you and talk about what are some comparables in the area, what are market trends, what are some competing offers maybe, to really make sure that you are positioning yourself in the right way for the right price and that you're well informed. We're going to talk about what your down payment looks like and the different options. Again, we're going to get very specific because you have a home in mind. And so we're going to look up how much are the property taxes, what's your homeowner's insurance, is there homeowners association. We're really going to go into more detail and make sure that you are really well prepared, as well as knowing the total amount that you're going to be coming with at closing. What does that look like? How much is the seller paying in closing costs? We're really going to get you well prepared so that this experience is a positive one. So what can you ask for? Heather, I really like the sauna that was, or what's it called? A spa. Sorry,
Spa.
I'm old. I really like the hot tub in this house. Can I buy it?
Sure, you can buy it. There's different things that we can do here. So you can buy it, but it can't be part of the purchase price of the home. Buying it is going to be a separate addendum. Now you can ask for them to leave it without you buying it, that it's just included in the offer, but the contract needs to state that the hot tub does not give any value to the home. Jennifer's favorite is you can ask for their dog.
You can ask for their dog and they may not give it to you, but they might if they don't like it and they want to leave it with the house. That might be scary, but there's just a lot of things that you can ask for. There are some things in the home that are considered fixed assets. A lot of times your things like your dishwasher, your stove, and your microwave are considered fixed assets. And so they really typically go with the home. A refrigerator is a variable. A refrigerator can stay or go. That's more, and it's so weird to me that you say that with, you would think all appliances were in the same category, but they're not. Right. But it just gives you an idea that some of the things can stay if you can ask for anything. They can't always be included in the contract because you really just want real estate fixed in the contract. So just keep
make
that
sure
in
that
mind.
you understand you can't raise the price of the home to include the 65-inch TV.
Yeah. So if they want another, if they want it, yeah. If they want another $2,000, I say $2,000. That's way overpriced for that TV. Don't pay it. No, but you can't increase the price of the home just because you're buying personal property. It has to be set aside outside of the transaction. And your real estate agent, that's why we say you really need to have a real estate agent on your side as your advocate. Every buyer should have a real estate agent. We're big advocates of that because they represent you, they look out for your best interests, and they can help you navigate through this situation.
And if you have an agent that you know that you want to work with, wonderful. If you need a referral for one, we work with agents all day long and can definitely give you several referrals for you to interview and see who would work best for you.
Okay, Katie, you have a question, and her question is, how do inspectors fit in, like safety, pets, and mold? And we are almost on that slide, so hang tight with us just for a second.
Great
and
question.
That's a really great segue into the next one. So Heather, tell them about home warranties. What is a home warranty?
So home warranty is something that you can purchase. Generally, you can ask the seller to provide it. And most of the time the seller will provide it. And it helps place warranty on the home for certain items. There are many different home warranty companies. They've actually come a long ways, I've noticed, in the last couple of years. Agreed. And so you can sit down at the title company, your realtors can help you out too, but you can sit down with the title company and look at what the plans cover. And there's silver, golden, platinum, or however, there's different levels, and you can see if it makes sense for the home that you're buying. If you're buying something that's brand new, it should have its own home warranty, and it's typical, or it's nothing. It may not make sense to actually get a home warranty, but something that's a little bit older, even 10 years old, that's going to help cover things like furnace, AC, plumbing, but you need to check the warranty and make sure that it's covering things that you think might go out in the home in the next year.
It's just a really good opportunity, and typically, like we said, a lot of sellers are providing these home warranties. You can renew it at the end of the year, and they're very affordable, $300 to $450, $500, somewhere in that range. They're very affordable for the coverages. They cover the major systems, so it's really a good thing to look into. We're going to go to the next, and because I think that a lot of these things we're going to be able to answer some of the questions that are being, so hang in there, ladies. Hang in there with your
awesome
questions. I know they're great questions. So 4 key deadlines. I talked about that there were 4 key deadlines in the contract. Now I'm going to go over the deadlines, but we're going to go into detail on them. So hang in there with me just a minute. First deadline, seller disclosure deadline, 3 to 5 days out. When I talk days out, it means from when you're formally under contract. You've made an offer, the sellers have accepted, you're under contract. 3 to 5 days out is the seller disclosure deadline. Due diligence deadline is 10 to 14 days out. And again, we're going to go over the specifics of what that is. The third one is finance and appraisal deadline, and that's typically 21 to 30 days out. And then the settlement deadline is typically 30 to 45 days out. Now, these are pretty general numbers. The thing that you need to be aware of is there are a lot of times that these numbers are shortened significantly from this list. There are times that we get calls and said, okay, we've already been pre-approved, we're under contract, and we need to close in 3 weeks. And we're good with that.
Yep, we're good with
We
that.
can get you closed in 3 weeks. We just need to know. You just need to communicate. That means that everybody involved, due diligence has to happen quickly. Finance and appraisal, we need to know up quick so that we can get that appraisal order. We can do those quickly, but this is just kind of a standard, just so that you're aware of them. And we're going to dive in and go right to the seller's disclosure deadline. So do you want to cover that?
Sure. So seller disclosure is, and you can actually Google it and take a look at it if you want, but it's a 6-page document that asks the seller about 25 very detailed questions about the house. Examples would be mold, termite, water damage, meth, things like that. If they know they've had to replace plumbing, different things like that. So this is your first opportunity to look through this and say, oh, there's just too much here. I'm going to walk away from this home, or great, wonderful, let's go to the next step.
Okay, and the next one is your due diligence deadline. Your due diligence deadline is really, this is when you really have to do your work. It's about 10 to 14 days from going under contract. So from when you first go under contract, your agent's going to get you started, and they're going to
done before 10.
You have to be done at the 10 to 14 days. By that deadline that's in on your contract, you have to be finished. So you're going to start really quick. Home inspections. Home inspections are going to help you address and some of the questions. Nicole, thank you for being patient. It's going to address, if you have an inspection, it's going to address radon or meth or mold. Those are tests that you have the option to hire and have done. They are not mandatory in the state. You talked about, is this general safety testing in Utah? It is not mandatory here. It is optional, and so it's really up to you to decide. Inspections can range anywhere from 300. We've got from 300 to 500 on here. Honestly, I've seen inspections go as high as $700. It really depends on the age of the home, the location of the home, and what the recommendations are, what the agent has seen too. We really rely heavily on the professionalism and knowledge of our agents that we work with as well. So those combined with, the home is going to give you an idea of what you really need to have inspected. You can also
go ahead. A lot of those things, and actually you can design the inspection that you have done, like you're saying, based on age of home and stuff. So you will have a standard pricing that's the general inspection, and you just need to talk to the inspector that you're working with. And then it's basically like a menu. You say, I want to add meth, I want to add radon, I want to add sewer line testing, I want to add...
It sounds funny, doesn't it, to say we want to add meth. We want to add meth and radon to this home.
So a lot of things...
No, you don't want to add that.
An additional cost, and generally not very expensive, but take into consideration the home that you're having inspected and whether or not you feel that those need to be done.
And then at that point, once you have your inspection done, then that's going to determine whether or not you want to request repairs. Or maybe you're okay with the way that it is and everything's fine, and you just really want to get that home for less money. You can request a price adjustment. All of those, you're working very closely with your real estate agent. And then at this point, this is really your second opportunity to cancel. If you go through all of this process and you just simply have a change of heart and you just decide that this is not the home for you, you can cancel with no repercussions, no penalty. You do have to cover whatever your cost of your inspection was, but your earnest money comes back to you with no risk of loss on that point. So again, this is your second opportunity to cancel. So your next deadline.
So the next step is ordering appraisal. And oftentimes, you as the buyer and the agent, you're anxious to get that appraisal back. We don't want to order the appraisal until you're done with your due diligence, until you're done with your inspection. Appraisers don't work for free, so we don't want you to be out the cost of an inspection and an appraisal. So the quicker you can get through your process, then this next step happens. And then from here, it's basically your final negotiating with the seller if there's any negotiating that needs to happen, if the appraisal doesn't come in as you were hoping. And it's typically the last opportunity that you have to cancel before your earnest money goes hard.
So what if we take longer on our due diligence and there's some unforeseen delays? How do we avoid having to ask for extensions? Are extensions a good idea?
Extensions are generally never a good idea. Lots of reasons for that is because when you're buying and selling, there may be 6 families involved because the person you're buying from is buying from someone else who's buying from someone else who's buying from someone else.
And believe it or not, people, that happens. It's crazy.
Yeah. So we want to set up, we want you and your agent and to set up reasonable deadlines, the 4 deadlines, reasonable deadlines to start from the beginning, and we will do everything we can to help you meet those. So as long as the steps flow, which typically they do. In the last 5 years, I think I've had to ask for 1 extension, to be honest, and it had nothing to do with us. It had to do with the seller's title.
We typically hound you really well once we get to this point, because we do want to make sure that you're meeting your deadlines and that you're not waiting for us. We would rather be waiting for you than you waiting for us. And so we really do pester you just to make sure that we hold true to our end of it and keep things. And we don't want to delay you. We want to make sure that you get in that house as quickly as possible. So, and then the last one is your settlement deadline. And this is where we totally celebrate with you. Your settlement deadline is 30 to 45 days from going under contract. So you can anticipate that from the time that you find the home and you go under, you make an offer and everything's accepted, within 30 days later to 45 days later, you're going to be a homeowner.
Yay!
I know. We totally celebrate that with you too.
Love it.
Your final walkthrough is typically a day or 2 before you come to the title company to sign your documents. Your closing documents, you're signing at the title company, and that typically takes about 45 minutes to an hour. That really is dependent on you. It depends on how many questions. You will get your closing documents ahead of time. You do get the documents ahead so that you can go through them and review them and maybe even make notes if you have questions. Some people get there and they just don't have any questions and they go through and they sign in as little as 30 minutes. And other times they get there and they just really have lots of questions and it takes over an hour. That is totally personalized to you. There is no pressure, no rush. This is your time to really make sure that you have all of your questions answered. And I will just say a side note, if you get to closing and you have questions that you feel like you're kind of being pressured, we are there with you. We're there with you to make sure that if you have questions, we're there to answer them, that you've got somebody that you can know and trust, that you've worked with through the process, and we're going to be there to help you through and answer those questions and make sure that you've got those answered. We do ask that you bring 2 forms of ID. This is a unique thing to the credit union. We ask you to bring your driver's license and 1 other. We actually ask for 2 to be photo licensed. So most of, maybe if you've, I say that, and our debit cards aren't. One photo, 1 other identification. A lot of people use, I'm thinking Costco. Everybody uses their Costco cards and they have their pictures on. The cashier's check or wire over down payment. Here's where we're going to put a caveat to this. We really would prefer that you come to the title company without worrying about this, because we're going to give you the instructions there while you're there. There have been a lot of cases lately where they've had problems with fraud, with title companies, people following and sending out fake wiring information, wiring instructions, and it really has caused. So we're just asking that you come to the closing and get the wiring instructions there.
But the better way to do it is
the-
just to make sure that your cash,
Yeah.
your down payment is on deposit with the credit union.
Yeah, if you have your accounts with us at the credit union, then we can take care of wiring that over. You don't have to worry about a thing. We can do it for you.
Yep, we'll just wire it with your loan proceeds. And
then it typically takes, just so that you know, it typically takes about 24 hours to fund your loan. Sometimes we'll do it same day funding. Sometimes we'll do the next business day. Typical is about 24 hours, just so that you can prepare for that.
the seller needs to sign, you need to sign.
There's a lot of things that have to transpire to make sure that everything happens. And so we just want to let you know that to be prepared for about 24 hours. And then once you've signed and everything's done, woo, we get to celebrate. That's when we really celebrate. Congratulations, you're an owner. It doesn't mean that the questions end. You're probably going to have a lot of questions, and we just want to remind you that's what we're here for.
Yes.
We're here to help you. We're here to help you not just with your mortgage. We're here to help you if you have questions about a home equity line. Say that you get in and you've been in your home for a year and you decide that it's time to finish the basement and you need a home equity line to help you. Give us a call. We're here. We want to make sure this is a full service opportunity. For, the credit union is a full service lender, and we want to make sure that we don't just have your savings account. We want to help you with your car loans. We want to help you with your finishing your basement. We want to help you when your kids go to school. So just give us an opportunity to help you. We've got a couple of more questions, and so we're going to answer just a couple more questions, and then we're going to let you go. But a couple of questions. So this is a great one. I love this.
And if you have any questions, get them in quick, because we want to answer.
Yeah, type them in really quick. So one of the questions that came up, can I get a gift of my down payment? Heather?
Yes, you can. An immediate family member, even an employer can gift you money towards your down payment.
Okay. What if I wanted to get a loan on my 401k?
Potentially, yes. And I say that because I do need to throw in the caveat if you need to check with your plan administrator, but typically you should be able to get a loan against your 401k to apply towards your down payment.
Okay. One of the questions, I love this one, thank you. Do I really need to be pre-approved before I go through homes?
Yes, please. It really is a peace of mind of knowing what the payment's going to look at. Kind of frustrating that people look on, online, and it says your house payment's going to be this. It is very unrealistic and does not apply to everyone's scenario. So yes, please come sit with me, come sit with any of the mortgage consultants, and we'll go over what everything looks like and make sure that what you're thinking is realistic and you're going to be comfortable with it in the end. We don't like surprises.
Okay, I really like this question. I'm going to have Heather answer this one. How do I apply for a loan?
Call me. You can go online, you can click on a mortgage consultant and apply directly to them. You can call me. I definitely love meeting in person, and it just seems to everyone that I meet with in person, they walk away with a better understanding and a comfort level.
That's a great question.
So we have do you have a program for people who are so the question is, do we have a program for people who are a foreign national?
Yes, we can. The biggest limitation, so thank you. And I'm going to say, is it Anchor?
Yeah.
We'll see how bad I meant. I'm sorry if I pronounced it. Oh, yeah, I got it right. Anchor. Thank you. So the question is, do you have a program for people who are a foreign national who have visa limitations when thinking of buying a home? There are some limitations when it comes to that, Anchor, and I appreciate that. The limitations typically come with the visa and how long your visa is there. We've run into some delays where people are been waiting for that year to renew if it hasn't been renewed, and identifying if credit has been established. That really is a bigger limitation than it is being able to do financing for you. So the best suggestion I can suggest is give us a call. Let us look at what your situation is. If you've been able to establish some credit here in the US, that is going to give you a big advantage. That's going to be really a positive. And if we can establish membership for you, we're going to be in a good position. It really all depends too then on what the status of your visa is. If your visa status is a time sensitive or otherwise. So just give us a call and give us an opportunity to look at that. That's a really good question. I appreciate that. We actually run into that more often than what you think.
Yeah, just being part of the U, that's definitely something that we
yeah, that's a great question. So thanks, Ankur. So another question, Carol says, so if you're able to do a 3 to 5% down for first-time home buyers, is that beneficial? Absolutely. Again, your situation, depending on whether it's 3% or 5% or 0% down, will give you options and let you know what options you can get into. And then you can choose what works best for you. We're going to be very sensitive to you having money left over after closing because we know that there are other expenses. So, so hopefully that asks. So some of the questions that we get were asked for contact details. I'm going to encourage you to get on our website. Y'all know where that is. You can get on our website and you can see each of the individual contacts. Heather is on there. I am on there. So it's Heather Bollinger and Jennifer Young. You can reach out to us either on our direct lines, and those are all listed right there. You're welcome to reach out to us there. We're always just a little bit hesitant. I don't know why we're hesitant. Or you can call the 801-481-8840 and ask for Heather Bollinger direct. So Ankur, hopefully that will give you the answer to your question. And we also just tried to respond to you personally. If that works, great. If not, it's live. What can we say? And Carol, thank you. Can the University of Utah Credit Union check my credit score? Yes, we can. We can check it with a formal application. The credit union also does some certain things, but the best thing for you to do, Carol, is reach out to us privately and we'll help you through some different options. If you're not quite ready, we'll help you with some suggestions. And if you are ready, absolutely, let's get it going. We'd love an opportunity to help.
If you're currently a member, we do actually get a credit score, not a credit report, but we do get a credit score about every 6 months on our members. And if you've done a car loan or checking and things like that, we typically have kind of a history. And so we can get an idea of where the score is. But to have an official score, an official application, yes, we can pull that.
Okay, we have one more question, and that is, what is the lowest credit score that you can use?
So we can do, we have products available from scores down to 520, 520 being an FHA loan. Typical FHA loans actually are 580. Ideal for conventional would be 620 and higher. And then our first time 100% financing is 680 or higher. So another question that that Carol has is if you are able to put money down towards the first time home buyer program, yes, it definitely can be beneficial. And that's one of those things that we'll look at. Do we want to do a 3% conventional, 5% conventional, or 100% financing? Even though you actually are putting money down, we could still do the 100% financing loan with money down. So we would weigh all of those out and see what makes the most sense.
Yeah, those are really some great questions.
Yes.
You guys have been great. We have kept you for almost an hour. I'm so sorry that we've gone so long, but those were wonderful questions and great interactions. If you do have questions, please reach out to us again at ucreditu.com. Again, you can find our personal information or just the general number at the 801-481-8840. So thank you so much. You guys have a great afternoon, and we will see you later.
Thank you, everyone.